Hello guys, now welcome to this tutorial. Now, as a beginner in trading, the first thing you need to learn is to understand candlesticks and candlestick pattern. Now, candlesticks are representations of what traders do in the market. So by looking at the chart, you can understand, you can read what traders are doing. So we have basically two candlesticks pattern. We have the bullish candle and the bearish candle. The bullish candle and the bearish candle. Bullish candle, candlestick, maybe let's it that way, and the bearish candlestick. Now, popularly all over the world, um, a the bullish candle is presented with green color. Why some people use black to represent the bullish candle. Now, please, color does not matter. Just understanding it, the concept is what matters the most. And for every candle, of course, a candle has wicks. Like if your normal candle, you will see something like a rope up. That's where you ignite the what they call that thing now. You put the fire. So it's the same idea. They used to label this in the candlestick. So you get that. Sorry. So just like your normal candle, it has the wick. Now, one thing you must learn about trading is that trade is like any other field. There are so many jargons. There are so many jargons. So if you are somebody that likes to cram things, you will have a lot of things to cram. But really, there's no need for you to cram anything. Just understand the concept. Sorry, don't mind this my drawing. So understand the concept. So it's just like this now. Wicks. So these are wicks for a bullish candle. I didn't place it well, but just understand. So now we say this is the upper wick and this is the lower wick. So we label them as what? The upper wick and the lower wick. So we call here the upper wick, and here we call it the lower wick. So now let me label that. So this class, I plan to make it very explanatory, that anybody that picks up this video will be able to understand. Upper wick, or sometimes it's called the upper shadow, or some people call it the upper tail. Any of these things, you don't need to cram it, just understand the concept. So this upper, so of course the one beneath is the same thing. It's just, so when there's upper, there'll be lower. So this is the lower wick, the lower wick, the lower wick, or lower shadow, or lower tail. Now, how did this idea come about? Now, in this particular market, what is telling you is telling the activities that, okay, at a particular time T, buyers were more in the market. So here is called the low of the market, where the bodies of the and this is called, okay, and this is called the body. Let me label that too, so that you will understand every bit of what I'm teaching. So this is called the body of the candle. So this is called the body of the candle. So the body of the candle is very important. So the body. So let's see now. So let's go again. The upper wick, the body, the lower wick. Now what happens? How is a bullish candle formed? Price came down to this particular low. That means sellers pushed the price particular low level. Then what happened? Buyers came back and pushed the market up. So here formed the lowest price at that particular time. The body marks the beginning, the open price. Open price. It's called open price. Then price moved up and got to this place and pushed up to this particular upper wick. Then sellers again pushed price down, and at the end of that particular time, price closed here. So once it's something like this, we say the market was bullish. The market was what? A bullish market at that particular time. So this is a bullish candle. It's as simple as that. So here is defined as the low, the open, the close, and the high. So you, as you go further in your journey, you will see something like this called open. So when you see something like this, open OHLC, you should understand it means open, high, low, close. So this is the low, this is the open for a bullish candle, the close, and the high. So this is a bullish candle. So this is how a bullish candle works. Do you get that? So let's use this part for a bearish candle. So here, a bearish candle. So the bearish candle is the reverse of the bullish candlestick. Is the reverse. So just like the bullish candlestick, the bearish candle is formed the same way, just like this. Now, for most people, the bearish candle is depicted with a red in red colors. So they will depict it. Most people, and on the chart, they depict the bearish candle as red colored. So, but hey, like I said, it's not about the color. Understand this. Some people use that. Some people use black. Some people use funny colors. The color does not really matter. It's for you to understand the concept. Of course, it has a wick. Has a wick. And both up and down. So let me change the color to red. That's the same way as the bearish candle. So now look closely now. This is the this is the high, the open, the close, the low. Now, the difference between a bullish candle and a bearish candle is that for a bullish candle, the open is below, the close is at the top. For a bearish candle, the open is above and the close is at the bottom of the body. So that's the difference between these candles. So here, the high and the low remain the same. The high of the price point that is high, the upper wick, the same thing, lower wick, the same thing, the body, the same thing, nothing changes. But what changes is the open and the close. The open and the close. So everything other than that is the same. So here's the body. So we have here again, yeah, the upper wick. Sorry, please. So we have the upper wick here. Upper wick, upper shadow, any one. Anyone that you like to, you can remember, please do well to just know it, understand it. Then we have the body. The body. Then we have the lower wick. So the lower wick. So here, I repeat, here is the low. For a bearish move, this is the close. Here is the open. Here is the high. So what happens? The buyers push the price up to this high. Then sellers rejected and pushed it back. Here forms the open. Then the sellers started having a great time with the market, selling down, and they push price down to this price point. Then buyers push it back at the end of the particular time frame or time. The market closed here. So we have the low, the close, the open, and the high. So let me label that. Just one. Okay, let me just here. It's called the high. Here it's called the high. Here, the high. Here it's called the open. It's called the open. Are you getting this? Okay. It's called the open. So here is called the close. Here is called the close. The close. And of course, like I said, here is called the low. It's called the low. As simple as that. So this is the low. So the same thing we have open, high, low, close. Open, high, low, close. So basically, this is the two types of candles that we have, the bullish candles and the bearish candles. So please feel free to explore this. So I don't want this video to be too long. See you in the next video. We'll talk about candlestick pattern. Bye for now.